What is going on, guys? What is going on? Good afternoon. Good afternoon. Someone is asking, what platform do I use? I use Public for day trading. I use Public for day trading options. And Thinkorswim or Tradeovate for futures. But Public is the only platform that I'm aware of that's regulated in the US that actually pays you a rebate. So not only are options trades free, but they pay you a rebate. We have FOMC coming up in 10 minutes. Damien, what's going on? Regine, Uptown Chris, Silver Fox, buenos dias. Actually, Ramaswamy, Simon, LH, Stephen Bailey. Do you enter your trades 5-minute or 1 minute? I enter my trades both on the 5-minute and on the 1 minute. Just depends on the setup. Live stream. Wait. What?
And some guaranteed income. They don't want 2% a year.
Sorry, I'm just trying to get the live stream here.
That's right. It's great for savers, but we also have to think.
All right. So at 2 p.m., which is in 9 minutes, we're going to get the Fed decision. Now, what am I expecting for the Fed decision? Jesus Christ. Whoever this Indian scammer talking about Solana is needs to go. Fuck this guy. Rajesh, another Indian bot. Got to go, Rajesh. Sorry, buddy. You got to go. All right. I'm expecting that the Fed not raise rates. Obviously, I'm expecting that the Fed not cut rates either. We had economic data that came out this morning that was actually really fucking good. So what came out this morning, ADP non-farm employment change, higher than expected, 104,000 jobs created versus 77K. Advanced GDP, Q2 GDP, 3%. GDP grew by 3%. Expectation was 2.5. Remember, Q1 GDP was negative at negative 0.5%. So with those numbers, it's going to be very hard for the Fed to justify cutting rates. And as a matter of fact, I think pretty impossible. Now, obviously, Trump has been beating the drum about the Fed cutting rates. And he says that after today, after showing a 3% GDP growth, we should cut rates even more so now. So what I'm waiting for, I don't expect Jerome to cut rates at all, right? And remember that the Fed is off in August. They just have the Jackson's bunghole meeting in August, and then September is the next FOMC. So what I, and I assume many other people want to hear, is whether they commit or Jerome commits to a September cut this early on. I suspect it won't be that cut and dry because I don't think that he wants to try to influence rates that much between now and the next FOMC, since there is a month break in August. And if he says we are going to cut in September, that might create a bit of, it might impact the markets heavily for, at least 2 months, because the next Fed meeting is at the end of September. So I don't think that he has any incentive to say, we're going to cut rates come September. But is he going to be a little softer on his language? I think that's what people are looking for. Google, this play was absolutely massive on all fronts. You guys know about the buys that we made in the 140s, a few swing trades on the way up, and then after earnings, swing traded it again. I gave you this in the last video, or at least I gave you a hint that that's what we were doing, but we bounced off of the pre-earnings open and basically got to the earnings high today. We closed those out at 60%. Super happy about that play. Looking for the next swing trade. Not sure what that is. I also told you guys on the last couple of videos that I was looking to short Netflix from here. Didn't get my entry, even though it did play out very nicely. SMCI, another one that I gave you guys, told you guys that this was a long, hit $61 today. Actually, I didn't even check on this today. But, breaking out, I told you that we would get a pre-earnings run-up on SMCI because that typically what happens when it's in an uptrend. You can see here before all of the earnings, SMCI gets a nice rally. It's only when we're in a downtrend that doesn't happen. And since we broke out of this year-long trend line, we've been in an obvious uptrend. So I could see a run-up before earnings, which is August 5th. We hit the first target of 60, and I think 66 might be likely before earnings. But super happy with that play as well. AMD's just been an absolute beast for us. Like I said, you have much bigger chance of doubling your money with AMD than you do with NVIDIA, and AMD has actually more than doubled since that April low. After all earnings are reported, I am waiting for a little bit of a potential pullback in the semis, but we have Microsoft, Meta, Amazon, and Apple reporting today and tomorrow, and it will likely show an increased CapEx spend. And the reason that I know that is because, or that I think that is because Google showed an increased CapEx spend, and I don't think that Microsoft or Meta are going to want Google to outdo it. All right. Another thing I'm looking at is a gold long for today. Gold swiped July lows. We took out July lows this morning, and I'm looking for a gold long. I actually did enter a long here. Got stopped out for $260 per contract earlier today. Took a few NQ scalps, still green on the day because of that, but I want to see if we get a gold, a bigger long on gold. We have a power of 3 here, right? So we consolidated overnight, came down to take out July low, and I think there can be an expansion back up. Now, on the higher time frame, what that expansion would represent is a retracement to potentially go short multi-day. Here's what I mean. So if you look at gold here, you can see this trend line. We finally broke that year-long trend line, and I want to see if we can get a retracement up to that trend line and to this balanced price range to potentially go down, because I think the dollar is overextended here and it might start staging a rally for the summer. Anyway, that's what I'm looking at. Let's see what the Fed, 1 minute until the Fed decides here.
It. So the Fed is stuck in a position where its dual mandate tension is most severe with low and middle income Americans. And it's those rate hikes over the course after the pandemic that really institutionalized that inequality in the United States. But the Fed has one tool, interest rates going up or down, plus the balance sheet. It can't solve what's really ailing America right now.
Why don't they just...
It's adjusting a thermostat when you have the front door that's wide.
20 seconds till the Fed, David. Why don't they just buy more mortgages like they did during COVID and bring down interest rates?
They shouldn't.
That way.
They shouldn't bring down interest rates, but they want to maintain their independence, and they may need to bend so they don't break to do that.
How far, Jim, can they bend before they break?
I think 2 cuts is okay for the rest of the year. I think that's the bending.
I think that's exactly it.
Well, Jerome Powell, maybe we'll see what his legacy might want to be. By the way, the decision right now with Steve.
A somewhat divided Federal Reserve, leaving rates unchanged at the 4.25% to 4.5% range, with 2 governors dissenting as expected, Governor Bowman and Governor Waller, who preferred a 1/4-point rate cut. It's the first time 2 governors have dissented since 1993. 9 votes were there to keep rates unchanged on hold, including the chair, 3 Fed governors, and 5 presidents. That's to say the dissenters didn't really get too much additional support over the 6 weeks they've argued for this cut. Swings in exports, the statement says, continue to affect the data. Growth moderated in the first half of the year, they note, which is from data we got this morning. And here's the line that didn't change, that people thought might give a dovish signal. It does not. It simply says uncertainty about the economic outlook remains elevated. That's the same line they used last time. They actually removed a word where last time they said uncertainty has diminished but remains elevated. They took out the diminished part. So they still see high uncertainty. That was an area where if there was a change, that was going to maybe signal a dovish move or a dovish move ahead. That would have changed. It did not. The Fed said inflation remains somewhat elevated. Same language as last time. Unemployment is low. The labor market is solid, the statement says. And the committee is attentive to risks on both sides of the mandate. So we'll wait to hear the press conference, Brian. But if there's a hint that the rate cut is coming imminently in September, that's not in the statement that I could read.
Okay, so, Steve, go into this dissent for the first time since 1993. We got 2 Fed governors, Chris Waller and Michelle Bowman, dissenting. They wanted to cut by 1/4%. How, if at all, relevant is that to anything going forward?
Well, unfortunately, there's not a really great track record. I have a little quip that I've used over the years, which is that dissenters can lead the way or lead you astray. I have seen both situations where the dissenters told us what was going to happen next, but also places where they've been on the wrong side of where things are going. So it's a little hard to see what's happening. I think what I would look at, Brian, is the data. The Fed gets 2 months of data between now and the next meeting, 2 months of inflation data, that is, 2 months of employment data. And so that's going to tell us if we have this continued low inflation, this idea that you have continued tariff inflation, but other parts of the economy are not showing it, such as the total number continues to be well behaved, the Fed could cut. And again, if there is a serious move downward in the job market, I think the Fed would cut again. But right now, I think you have to wait for the data, and it's really hard to front run all of this. I'll wait to see the percentages when we're done here. I can look them up and see where we're at in terms of the probabilities. But they were around 65%, which is confident but not overly so about a September rate cut in the market.
Yeah, and we're going to look at that right now. The CME Fed tool, of course, you've got your own with the amazing Fed survey. Steve Leisman, we know you got to get into the lockdown. You're going to get that question in. Really look forward to it, Steve. Great stuff. Thank you very much. Get back now to our panel on this. So we got what we expected, Francis. We got no cut. Okay, we got 2 dissents from Fed governors, first time since 1993, before you were born, even. Okay,
I wish.
This dissent happened. What is Jerome Powell going to do at the next few meetings? Because he's on his way out. And his legacy is, I don't want to say on the line, but what he does is kind of how we're going to remember him, because that's how things work.
I might take a step back and say there's so much focus right now on Chair Powell, the individual, as if we remove Chair Powell, that's suddenly going to change dramatically the path of the Federal Reserve ahead. I'm going to put forward that actually it's the data that's going to determine dramatically where the Federal Reserve
goes. As Steve
goes
just said.
next. Exactly. And the issue is for Chair Powell is we may not have full clarity, even by the end of Fed Chair Powell's term, on what exactly is happening with tariffs in this economy. I do not think we're going to be able to see by September how tariffs are infiltrating inflation. It's probably a late 2025 story. And at the end of the day, this is going to come down to, is it a demand destruction story? Is the U.S. going to slow down materially? Then you can have big rate cuts. Or is there a lot of inflation? And that is not related to who is Fed chair. That's related to the economy and trade policy.
Okay, Jim, I'm looking here at the CME Fed tool, Chicago Mercantile Exchange. You can see it on my computer here. David, you're just going to have to trust me on this one, all right? But it shows a 60% chance of a 1/4% rate cut at the September meeting and a 38% chance of a cut by the October meeting. Do you agree with that?
I think it's a fair assessment, right? So, but I think what we have to do is
just the market's aggregating data.
It's the market's assessment, right? So the way I think about this is that we have been waiting for the impact of tariffs to hit the markets in terms of inflation, in terms of jobs, and we've been kicking the can down the road. We've got a couple of months to figure this thing out, and every month that goes by that you don't have higher inflation, that you don't have a worsening labor market, it creates a diminishing effect that the tariffs are going to be as negative as people think. Now, there could be a cliff effect, but I don't think it's a cliff effect where all of a sudden you wake up.
What's a cliff effect?
Meaning, like, all of a sudden you wake up one day and you realize, like, okay, inflation's suddenly arrived here. It's usually a progression. This progression towards higher inflation may be happening right now, but the rate of change is going
Shit. Sorry. I was on mute. By the time Jerome Powell starts, I think we will be taking data high. Because that right there is the Fed meeting, the Fed announcement. That's data high right there. So we have manipulation that way. And then we manipulated down to equilibrium. And I think from equilibrium, we bounced to take out data high before or when Jerome Powell starts. And then we'll see another manipulative move when he starts talking and after he's done. So that right there is data high. Jesus, you guys are panicking. So I want to see if there is We took the 2 p.m. low, swept that at EQ, and I think we take out data high right there. Let's look at what gold is doing. Yeah, so that right there is data high. I think there's a long on gold to take that. And I think gold might go higher even. I want to see if I can find a long here. If we get above this, no, they're not cutting rates because of tariffs. It's because economic data is so good. Nobody cares about tariffs anymore. Like, it's clear that most of that is priced in. Jerome talks in 20 minutes, so we'll get back to this then. Look at this retard. Fed needs to lower interest rates. The metrics have been met. This is a TDS mental illness now. Yeah, bro. That's why they're not lowering rates, because of TDS. Ignoring the fact that Jerome himself is a Republican, for one. Two, what metrics have been met? If the economy is doing great and stocks are doing great while rates are still up, that means that rates are where they need to be. They will lower rates when financial conditions are tightening or when bank lending is tightening or when unemployment starts going up. Or when we finally have disinflation. Taco, they're not worried about tariffs. Yeah, exactly. Your take on UNH. You don't want to hear my take on UNH. Data highs coming in. I want to see if I could take a long on gold soon, guys. I think gold has found the low of the day. Here's my take on UNH, okay? My take on UNH is this. People, noobs that are involved in the stock market, okay? You're about to learn a very easy but necessary lesson today. Noobs that are involved in the stock market, right? Why do you think they're so enamored by UNH? Why are all the noobs talking about UNH, right? Same noobs that are talking about Palantir is so high, it's time to short it. Why is Palantir so high, right? These are the same noobs that think this. What do these things have in common? What does Palantir being so high or UNH being so low, what do all these things have in common? Right? It's known information. You're not saying something revelatory, right? You're not the first person to think, wow, UNH was trading at $630. It's now $263. I think it's undervalued. I will buy it and make money. Right? You don't think everyone and their mom sees this? You don't think everyone and their mom knows that Palantir is overvalued? You think that you're the only one that came up with that? So a very basic lesson in the stock market is if it's priced in and it's obvious, you are likely not going to make life-changing money from it, okay? The second lesson is people approach the stock market as if they're buying discount Halloween decorations at Target, right? If you go the day after Halloween, they're actually much cheaper, and then you can buy them and store them until next year, and that's how you save money. This is how people approach stocks. Shout out to Target. I used to work there, by the way. But this is how people approach stocks, right? They're like, this seems like such a bargain. I never thought of UNH before. I'm not a fan of the company. I know nothing about it, but it seems cheap. I will buy it and then make money. Not how the stock market works, bro. Like, do you think that you stood a chance of making more from a stock like UNH or a stock like Google? Right? Very, very, very big differences here between a stock like Google and a stock like UNH. A stock like Google, who's actually growing, where there was some panic regarding search, and you had the ability to trade a narrative that had a high chance of being broken, right? Like narrative breakers are one of my favorite setups, just like DeepSeek, right? Oh, China figured out how to maximize LLMs. It's over. AI is over, right? You're trading the counter narrative. So if the story that's in vogue currently caused a price drop, but you know that the background of that story is, or you know that behind the scenes, that story is 1, inflated, 2, an overreaction, and 3, you know that the real story is that the real narrative is that no, NVIDIA is still the most valuable company in the world. No, there's still a ton of growth left for AI. You are trading the counter narrative. If you are looking at UNH thinking, you and every other noob online is thinking, oh, I'm going to make so much money from this, based on what? Everyone can see this, right? And also this idea that something was high, now it's low, we're going to start printing money. That's not how the stock market works. For those of us that have been around for a long time, you know, for instance, how long it took for Cisco to get back to where it was, right? How long it took for IBM to get back, how long it took for companies like Dell to get back. UNH is a broken company right now, okay? Yes, it is undervalued by certain metrics. If you're looking at PE, if you're looking at things of that nature, but it has a lot of headwinds coming up, right? Trump has a crusade against drug prices, for one. 2, the obvious lawsuits that it has against it, right? And the fact that a lot of these companies are seeing competition from the likes of HIMS, which is Novo, another reason that Novo dropped 30% yesterday. So there is a time and a place to pick up UNH, and I think it's okay value. But you're talking about a value stock that for a very brief moment in time acted like a growth stock. And people are hoping that now they caught the bottom and that it will once again act like a growth stock. Look at UNH's growth, right? Look at UNH's EBITDA growth or its CAGR. Look at its free cash flow growth. It's not in the same stage that it was post-COVID. So there is value there if you're buying it for, 5 to 10 years. Certainly there is value there, but people are acting like they can't believe the stock is not going up, as if, they've been fans of this stock for years or something. The only reason that it's on their radar is because they think that they're shopping for discount tires, right? That's it. No, Janesh, everyone and their mom didn't know Google was cheaper compared to any Mag 7, right? That is the point, is that the narrative, if you look back at what people were saying about Google, people were saying that search is done, right? Google is likely going lower because blah, 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 seismic change that investors haven't figured out yet. This is the beginning of the decline. This was the narrative. This was the mainstream narrative. Turn on CNBC on any given day in April or May. Oh, my nephew uses ChatGPT. I don't know anyone that uses Google except for boomers. Nobody uses Google search. All the kids are using ChatGPT, right? Like, this beginning of the decline narrative was the dominant narrative. So my point is, when you're trading Google, you're trading the fear. And a lot of people when I was making videos on Google, they didn't want to buy Google because of this, right? They were like, search is dead. It's over. The story's over. You're trying to trade a story that is already concluded, right? That was the narrative. The narrative wasn't everyone thought that Google was a good buy. Trust me. I do this shit for a living. And that's why UNH went down already. Yeah, I mean, I figured that there was a chance that would happen, that it would go down after earnings. I said Finex will be in absolute shambles if UNH tanks after beating earnings. Right? I still think, and go back and watch my video that has the thumbnail that says August or something like that. And I said, I'll happily pick up UNH at 200. And look at all the comments. You're ridiculous. No way UNH is going to 200. You must be out of your mind, blah, blah, blah. Okay. That's where I think it's going. And I will pick it up, but I'm not. There's a guy yesterday that I saw online, and Powell talks in 10 minutes, by the way. Wait, did NQ take out data high or no? Yeah, okay. So when Powell starts talking, I think we take out data high. There's a guy that I saw yesterday online that lost 20 years of investing gains because he threw all his money into UNH. Do you know how hard it is to do that? How hard it is to lose 20 years of investing gains? Let me see if I can find it for you. And I'm not ragging on this guy. I'm just trying to give you a sense for how your like stock market investing is easy. It's not hard. Trading is hard. Investing is easy. Okay. You just you just don't do dumb shit. That's it. So, where is this guy? Hold on. Oh, I just saw it. Hold on. This guy here, he says, UNH, I'm down 6 figures, and if I close out my positions, I will erase the capital gains I have ever made in the course of 20 years. I'm not selling. And there's just like this crusade of people that are just continuously buying UNH like no tomorrow, as if everyone and their mom can't see that where the stock is trading at, right? So I will be picking up UNH at some point, most likely near 200-ish, but I'm not going to make it 20% of my portfolio or 50% of my portfolio. I'll pick it up for a cool, 3, 4, 5% max of my portfolio just for value. I'm not even picking it up because I'm expecting it to rally hard. You're looking at a company and you're judging whether there's value there. And I think it will be extremely undervalued by almost every metric if it gets to 200, but momentum is also an important factor in the stock market, and momentum can take us there. Are you shorting UNH then? Just because I'm not buying something doesn't mean that I have to short it. Another mistake that a lot of noobs make. Why would I short it? Right? I need a trade setup to short it. I wonder if gold is along here. Hold on. This is so messy. But on the 15-minute, do you have any opinions on the quantum computing sector? Yeah, I think it's all hype. So if you understand momentum and setups, you can make money from it. I don't think that it's anywhere as important as AI itself. I might take this trade just based off the risk to reward. I don't like to trade while Powell is talking, but the risk to reward is definitely there. What the fuck? Not this. Oh my God. All right. 3 minutes until Jerome. I think there's a 15-minute long on gold to get to data high from here. It's only 2.8 points of stop. What? Thinking about do I want to take this here? Open, high, low, close.
Fentanyl being shipped from China to Mexico into the U.S. and directly into the U.S. So the answer is yes. I think that the Fed certainly has a handle on tariffs. If you look at the data to date, Brian, all of the chicken littles and the naysayers saying that tariffs were going to cause inflation.
We got Kyle Bass. Thank you very much. Sorry to cut you off. Here is Jerome Powell.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth.
As soon as Jerome started talking, we took data high on NQ.
In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022 but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer-run goals and monetary policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Chair Powell. There's a lot of lean in the markets, and not to mention out of the administration for a rate cut now in September. Is that expectation unrealistic at this point?
So, as you know, today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%, as I mentioned, even excluding tariff effects. The labor market inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So, just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Sorry, I forgot that I was on mute. I said that I took a turtle soup long from this 5-minute fair value gap, and you could see that you saw that it was up, I think at the peak, like $1,200. And my profit target was data high of 2 p.m. I still think it might get there, but obviously while Powell is talking, we're going to see these big wicks in both ends, taking out both stops. But I love the risk to reward. So I got stopped out for break even, but I will look for gold longs soon.
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
There have been several deals that have been struck, and now we seem to have an idea what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right. It's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Neil. Hi, Mr. Chairman. Neil Irwin with Axios. This morning we got a GDP report in which final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future. For where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable. Which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we, of course, will be watching that carefully.
Thank you. Colby Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, what you want from everybody and also from a dissenter is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think all around the table. In terms of, you ask about the June SEP, I wouldn't, that you're right, that's what it says, and that may well, I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, we haven't made any decisions about September. We'll be monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be at some point, when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be the way the economy reacts over time to, slightly looser policy.
Nick Timmeros, The Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. It's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic, expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. You know, we haven't reacted to new inflation, but I mean, I wouldn't insist upon that. But I don't think, I think the base case, as I said, a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, though, and that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
Michael McKee from Bloomberg Television and Radio. The one big bill, leaving aside the adjectives, do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say when you think that, you know, the biggest part of the bill was making permanent existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, what do you, well, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost to the government of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's, you know, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that, and it wouldn't be good for, if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Hi, Victoria Guido with Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So, you know, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work, and I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation, sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. And if you go back to.
So it sounds like, as I said, they're not going to commit to anything in September. Hold on, let me see. Am I on mute? They're not going to commit to anything in September. ES is close to taking out yesterday's low after this power of 3 here. I think that's the draw on liquidity. Gold continues to drop. It looks like it's gunning for June low, which is that low right there. So not going to touch gold again until potentially that is taken. There might be, even though NVIDIA is bullish today, it did take out yesterday's high. And we might get some retracement down, especially if the market continues. To fold here. So I'm looking at potential NVIDIA shorts just as a day trade. To potentially that low right there. I'm going to set an alert on gold here. Yeah, took out yesterday's low. I'm going to see if I could take the 177.5 puts on NVIDIA to equilibrium. Let's see if we get a continuation down here. I have 50 of these puts. Currently up around 10%. Had a nice trade on gold that I stopped out for break even. I want to see if we can get to that low right there. Nice. Up 1,200 here. Up 1,300. I'm going to take 35 off. I had 50. I got 15 left. Let's see if we can get to that low. But I was gunning for NVIDIA all morning, and it finally took out yesterday's high. So with the move down in the indices, I wanted to see a retracement to at least 0.5. More conservatively, that low, which is above the 0.5. I think it can do it. I had 50 puts. I have 15 left. I took off 35. For those of you asking what platform this is public. I'm going to take out 5 here. I got 10 left. Let's see if we can get there. 20% on these puts now. Beautiful move. Beautiful move. I'm out. I'm out. Target hit. Beautiful move. What a move. It can tank all at once. I was gunning, for those of you that were on the live stream this morning, you know I was gunning for NVIDIA the whole day because it looked like a PO3 setup from yesterday's PM pre-market. We rallied up and I'm like, where are we going to stop? And then I said, you know what? I'll revisit this later when we take out pre-market high, yesterday's high. We swept that liquidity, confirmed a CISD close. As you can see there, that's a change in the state of delivery. And I took the 177.5 puts. So slightly out of the money, but if it got to my target, they would be at the money. And it's because they expired Friday. If I was trading 0 DTE, I would go in the money for sure. I would not go even slightly out of the money. And after taking out yesterday's high, just wanted to see a typical retracement down to the fib levels. That's it. I'm not expecting NVIDIA, to tank all the way, but that's all I needed there. So yeah, I made a little over. I made around 2K on that. If you want to see my executions, they're all here. I bought 5, sold 35, then 5, then 10. All of my live executions there. Again, this is public, and the dopest thing about public, and we are so lucky to have them in the US, because the dopest thing about public is it's the only platform that I know, not only are the options trades free, you get paid back rebates of order flow, right? So the way that Robinhood and Webull make money, the reason that those are free is because they get paid in order flow in order to execute your order. So public gets paid in order flow as well, but they give you back a slice of it. So you get rebates when you're trading. Not only is it free, it's better than free. So if you want to trade on this platform, use the link in the description. You'll get up to $10,000 to transfer your account over. For now, you have to be in the U.S. And yes, they're regulated in the U.S. by FINRA. They're based in New York. Really dope platform. And I like the UI. Makes it very easy to day trade. Perfect exit there, man. I knew that just a little bit of a pro tip. You know, if you are trading something that is really bullish, for instance, and you are taking it short after liquidity sweep, you can't expect it to tank. You know, NVIDIA might get down to these equal lows, right? It might, who knows? But for an optimal target, a typical retracement goes to the fib levels, and more importantly, the most secure one is the equilibrium, right? 0.5. So I just took a measurement of the low of the day and the high of the day, and a 0.5 retracement is where I targeted my exit. I actually targeted my exit a little bit higher at this low, just for a little bit more cushion. No need to be greedy, but I was waiting for that motherfucker all day. Ask anybody in the chat. Where do you send these alerts? When I'm actually trading live on the live stream, it's just like this, but just in the Discord. But in terms of swings, all of my swings are here. So you can see we just closed out the Google calls this morning at 63%. SMCI. I closed those at 94%. AMD hit 100%. Amazon calls. July has been, and I mean, you don't have to take it from me. People that are in the Discord are on the YouTube stream in the chat right now. They can tell you what our win rate was for July. It was one of my best months trading ever. But don't take it from me. I don't want to come off as some sort of salesman. If you have a question, just ask it in the chat. And I already recognize a bunch of people here from the Discord. They can tell you. Sick. Super sick, man. Quick $2,000 on NVIDIA puts. Someone asked, why is the market tanking? Bro, what do you think is going on right now? It's FOMC. Also, tomorrow's the last day of July. If you guys have been watching my videos, you know that I'm expecting a slow August and a slow September, and I think we can get a correction. What a perfect exit, man. I think we can get a correction come August and September. So, oh yeah, one thing I wanted to say is I made a mistake in my last video. By the way, guys, hold on. Let me check something here. You guys don't think that this is a travesty here? That there were almost 11,000 people who joined, and I gave you guys a banger trade on NVIDIA, and there's only 339 likes. It's free, guys. It's free. Hit that thumbs up. That way other people find a decent trading stream. What I was saying was I did make a mistake on the video, on my last video, because for some reason my 20-day moving average actually had a incorrect setting, and so it was showing, I think, the 100-day or 200-day or something. But I was saying that this is the most, I think, tied for the 4th or 5th most in history number of days above the 20-day moving average. And so I do expect to not only get down to the 20-day moving average, which is 6,300, but I do expect to get below that, right? Because rarely ever do you just touch the 20-day moving average when you start reverting to the mean. You're trading above, and then, you know, there you might tap it a few times, but then you start trading below and you tap it a few times. So there is that gap here between June 23rd and June 24th. This is what I would love to trade down to come August, September. Would be an even bigger gift if we trade down here. These two targets, I would start dollar cost averaging on stocks that I missed out on. And by I mean you. Justin, appreciate. Oh, holy shit. Justin donated $100, man. God bless you, bro. Appreciate it. Gonna stream more. On YouTube, that's tough, bro. I'd much rather stream with the family in the Discord, I'll be honest. YouTube is, like, today I'm doing better because I'm not paying attention to all the spam and all the troll comments, but YouTube is like streaming in a mental asylum. That's what YouTube is like. Most people are cool, but there are, you know, quite, and I make the mistake of trying to answer everyone's question. So I do look at the comments a lot to try to answer people's questions. But then I instantly regret it because then I'm trying to trade, but now I'm sidetracked talking shit to someone. This would be a gift here, guys. Going back to March high would be a gift. March high, May low. Or sorry, June low. March high, June low. That would be a gift here, like this range. I don't know that we have enough bearishness to get there, but August and September are a long month. They're 2 months. I think in 2 months we can see weakness. That I think is almost a certainty. So between, you know, 6,000 and 6,060, I think that's an almost certainty. This I'm not so sure about just yet, but I'm ready for it if it gets there. Grundy says, I think the next time you have a lifetime sale, I'm going to join. Here is the rub, Grundy, is that the last lifetime that we had was the final lifetime we will ever have. No longer doing lifetime memberships. We'll have yearly, but no longer are we doing lifetime. All right, I want to see, is this idiot done talking?
Wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September?
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases, or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but, you know, GDP is bumpy quarter to quarter. half to half, and often gets revised, after the fact. The labor market data we still think is continue to think is the best data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages, still at a healthy level, but moving.
If anyone is on a Mac, do you know how to make a window stay above? In Windows, it's very easy to make a window stay above other windows. I know that there are some shitty third-party tools that I've tried on Mac. Like if I wanted to keep this window here and click on the chart, the window goes away, right? I would have to do like this in order to keep both of them up. In Windows, it's very easy. But on a Mac, do you guys know how to keep a window above another window? I think there may be a long here. What a snipe on NVIDIA, bro. I love when thousands of hours of hard work and study pay off. I expected a retracement, but only down to the fib levels. Yeah, I don't want to long gold anymore. I unfortunately was up $1,200 on a gold long earlier that I stopped out for break even. For those of you that were on the stream, oh, he's done.
Also, perhaps reducing the perceived expectation that we might get a rate cut in September. This is Closing Bell. I'm Mike Santoli in for Scott Wapner today. Let's take a look at the markets. They have backed off.
Honestly, the markets are still very flat. It's only because we're looking at intraday charts that it looks crazy. But NASDAQ is only down 0.03% and S&P is only down 0.3%. But I do think that, remember, we have Microsoft and Meta tonight, and we have Apple and Amazon tomorrow. So I'm still not convinced yet in opening up a lot of hedges. And I'm not convinced yet in a position on the VIX. I actually think that the VIX, this 17 VIX here, after earnings are reported, and I think all four of those companies are going to beat. After those earnings are reported, I think the VIX trails off here. I think this is just post FOMC. I will do a video on the totality of what Powell said, because there was some hawkishness in there mixed with some expected talk. But for the most part, he did not commit to cutting rates in September. Wait, no way. So if I did what? Click on the blue speaker of Safari. Oh, Safari. But yeah, what if I'm using another app though? I'm not trying to get Safari, just Safari. Like if I want this Thinkorswim to stay above, I couldn't. Yeah. It's kind of whack. Whatever. I wonder if we get a long here. Wait, when did Powell start talking? That is FOMC high. Did NQ get to previous day low or just ES? Oh, NQ did too. Fuck. Yeah, this looks like a PO3 on the VIX. I actually think that you're probably better off playing a VIX short. And remember, the VIX is based off of VIX futures. It's not based off the VIX index. So if you look at VIX futures right now, it's trading at 18.16, right? The VIX index is trading at 17. This is the mistake people make, is they go out of the money and the VIX makes the move that they want, but their option is losing money because the VIX futures are priced different than the VIX. So if I was going to short the VIX, I would take the 18 puts, whereas people looking at this would take 15 puts. And, you know, the VIX might drop tomorrow and their puts are losing money because they've gone too far out of the money based on the VIX futures because they think that VIX options are based on the VIX index. They're not. VIX options are based on VX futures. Something that nobody will tell you. No, there's no more lifetime membership. What do you think about Meta, Microsoft, and Apple after earnings? How could anyone in God's name tell you that? What's the update on Tesla? No update, just consolidation. What will God do? Astaghfirullah. What do you mean, bro? How am I going to know what God does? Anonymous, appreciate your donation to St. Jude's. What God will do is reward you if you donate to charity. Where do you see the main support on Lulu? Ha! Holy shit. This is the next UNH. Mark my words. Huang Li, thank you for your donation. This is the next UNH. Gee, Lulu used to trade at 518. It's now 200. I will buy it and make a lot of money. Yeah, Lulu is clearly a falling knife. Reports earnings August 28th. If you guys want more pro tips, all right, and guys, give thumbs up for all these pro tips that I'm giving you. Another pro tip. Here's a reason why I don't invest in companies like Lulu. Okay, Anonymous, appreciate your $20 Canadian donation to St. Jude's. Whoever that was, thank you. Here's why I don't invest in companies like Lulu. Okay, Lulu has way too much competition. Alu, Athleta, any of you guys with girlfriends or wives know what I'm talking about. Okay, Nike, Skims, way too much competition. I don't care for trading stocks that are in a crowded space. If you notice, all the stocks that I trade are monopolies or near monopolies in the space. Sorry, not trade. Sorry, invest in. Trade, I'll trade anything. I'm talking about investing, right? All of the stocks that I invest in are either monopolies or near monopolies in the space. Badra, thank you for your donation, man. Thank you for your $50 donation. That's very generous of you. AJ, appreciate your 50 Canadian donation, bro. Appreciate it, man. All the stocks that I invest in are either monopolies or near monopolies, okay? Lulu is nowhere near that. Now, does it mean that you can't trade it? No, I might swing trade it at some point, but this is also a falling knife. So I'm not swing trading a falling knife. Someone said, why not consider puts? Bro, this stock fell from 500 to 200 and it's a falling knife here. Do you know how expensive puts are? Here's what happens when you buy puts on a stock like Lulu, okay? You buy puts which have an insane amount of IV and premium and delta baked into the premium because you're buying puts and you're not early, you're a latecomer. If the stock just retraces a little bit, you're fucked. Your puts are going to get sandblasted. All right? Because you are buying them, quote unquote, late, and they're so much already baked into the price that any retracement, those puts are going to start losing value like crazy. That's why you don't buy puts in this situation. Now, if you said, for instance, if you were taking a trade, and I didn't take this trade, but let's say that you were taking a trade like this, where you say to yourself, okay, if Lulu retraces up to 0.5 of the move, I'm going to buy puts here, right? You're buying puts after a major rally. Puts are cheap. So then once they start printing, your puts are going to gain premium expansion as everyone starts piling into puts and raising that IV. Your puts are going to start printing, but you don't buy puts at the end of the move thinking that you're Einstein here. All right. You're not. Anonymous, appreciate your donation, $50. Another anonymous, $5. K80, appreciate your $20 donation. Uma, thank you for your $20 donation. And another anonymous for 20. Appreciate you. When the FOMC rate decision? If this guy was in front of me, I'd smack the shit out of him. All right? Let's just put it that way. How can you expect to trade if, one, you're hopping on an FOMC stream asking when is FOMC, and two, you can easily type that question into Grok or ChatGPT? We have 33 minutes until market closes. I wonder if there's a setup that we can trade here. You know what? I do want to check on something here. Anonymous, appreciate your donation. Thank you. Oh, thank God we closed our Meta 3 days ago. I think it would be so pretty if Meta can get below 680. Below these equal lows here. I might have a buy staged here. I wonder if it dumps after hours. You know, when it does one of those momentary dumps before rallying back up. This seems ripe here. $662.67. Might actually sell some puts too. Hold on for a second. I'm going to set this up here. Setting and after hours GTC buy on Meta shares at because there was this high here. Okay, no wait. I'll set it at, what is that high? 662.67, yeah. If we take out the equal lows at NQ needs to come back. NQ is not going to come back today. And this guy says, I just bought gold. No. Like I said earlier on the stream, that low right there is June 30th. That June 30th low is what I'm targeting on gold. Also, notice that gold in general has broken a major trend line. This trend line was the 2025 trend line. This started in December of 2024. And we just crossed below that. Now, I think there's a chance we take out June low, retrace up, but I'm still short biased on gold, as I think the dollar is likely going to stage a rally here. You could see that the dollar broke market structure. This is the daily chart for the first time since January. So the dollar broke market structure for the first time since January, and gold broke market structure for the first time since January. Okay? They move inverse. If the dollar stages a rally here, gold will likely have a retracement, and I'm targeting that 3,100 area. What's your take on Baba, Chipotle, Tesla? What's my take? Chipotle's yummy. Teslas, I think there are better electric cars. I have the Audi RS e-tron GT. It doesn't have FSD, but I do think it is a nicer and better EV than a Tesla. And Alibaba, if you are looking to buy stuff just for you, use AliExpress. If you have a business, you can use Alibaba. Those three, that's my take right there. Yeah, I think this VIX move might get faded tomorrow. I just don't see Microsoft, Meta, Amazon, and Apple missing earnings. I think all four of them beat earnings, but we're going to be looking for nuanced things from each of them. Amazon, there's going to be the cloud numbers that we're looking at, and AI spend. With Apple, we want to see whether it has an AI announcement or else it's cooked. Microsoft will likely, in my opinion, not move much, and it will beat earnings as it does every single quarter for the last million years. And Meta, just based on the technical setup, I think there's a chance it may trade after hours down a bit before springing back up, but I don't expect most of those stocks to make huge moves tomorrow, except for Apple, if Apple has an actual AI announcement. Q Vintrix, you're welcome, man. Oh yeah, Pan W, I did see the drop today. I think that this is such a strong company. And it tanked due to an acquisition. I think this is just a dollar cost average level here, in my opinion. I wonder if there's... These all look like closes. Yeah, I mean, I think this is a decent dollar cost average level for Pan W. I don't think it's like a get rich ASAP type of buy, but I think this is a good opportunity to pick it up, especially because it dropped due to an acquisition and not necessarily something more insidious. Like I said, I'm waiting for Costco below 800 or below 900. I think we get there. I did not expect HIMS to go back up near all-time highs after regulators said that it couldn't sell its cheap compounds of obesity drugs. I don't know how they're doing it. Hey. Is 400 to 500 in the cards for Tesla in the coming week? Bro, what pipe are you smoking? Oh, wait, Hood reports today, huh? Ooh, interesting. Interesting you want to do a strangle on Hood for some reason, even though it misses the expected move most of the time. Why would you want to do a strangle on Hood? I feel like people just throw out these ideas and not look at any data, even though you can easily find this data. 67% of the time, it misses the expected move. Here's how effective a strangle is. 17% win rate. And the average return is minus 43%. What do you think about UPS? I think they're very fast. They have good customer service. And they've never broken a package when delivering it to my house. I think most people don't know where to find the data. Yeah, this is a problem. People are cooked because it's not that hard to go on Grok and be like, give me the last 12 earnings data on Hood, and did it beat the expected move? Like, just start there, bro. You have access to all kinds of free shit. What do you think about Ligma? I think that your mother is a pro at that. That's what I think. I could be wrong. I could be biased. Because, I mean, she does have a lot of customers. So this is just one customer's opinion. Take it with a grain of salt. You're better off doing an iron condor on Hood. Let's see if that pays, actually. This is not bad. So on Hood, you could do a $1 wide iron condor, and you could sell it for 50 cents or $50 each. So the max loss would be 50. Max gain is 50, max loss is 50. So Hood would need to stay between 115 and 98. And the expected move is $8.70. That's not bad. That's not a bad trade. Because like I said, most of the time, Hood misses the expected move. I actually might take that. Why not? $115, $116 call spread. $98, $97. I don't know if this fills. Thoughts on talling large 1 mil? Bro, I have no idea what you're saying. Would you do a CSP on Hood? I think you're so late for that, bro. Can you show me ideas and options for Tesla? 0 ideas. Can you show me ideas for oh my god, bro. How many times can you type the same thing? INTC? So funny, man. Again, like it's so funny that so many people want to trade the shittiest stocks when we have the invest in the shittiest stocks when we have the best stocks in the market in these sectors. People are like, Intel's cheap. It's $20. I'm going to trade it and it will hit 70 again. I'll be rich. As opposed to looking at actual trade ideas on monopolies like NVIDIA or potential second runners up that are about to take a lot of market share away from NVIDIA, like AMD. Really, the only 2 options in actual chips that you should trade besides things like TSM or Applied Materials or ASML. I'm talking about the actual retail chips themselves. You really only have 2 options, NVIDIA or AMD. And yet people are like, I'm going to buy Intel at 20. And then, Intel stays down here while obviously AMD and NVIDIA have much better cases. I don't know what about AMD or what about Intel you like. Intel's a company that was a leader in the market, lost all of its market share due to stupid decisions and hubris, really laughed at the idea of putting its chips in mobile phones and thought that it had cornered the PC market for life. Meanwhile, a company like Apple, who has no experience designing chips, kicked Intel off of its workflow and was able to design a chip that Intel could only dream about, right? It's wild that people will look at this just based on, again, this bargain buyer's mentality. People think that they're buying discount tires or think that they're buying wholesale Halloween decorations when they're buying stocks, and they don't look at any of this. They just look at, where was it trading? Where is it at? I am genius. I will buy here and I will be rich. This is a trash company, in my opinion. You're forgetting Samsung. No, I'm not forgetting Samsung. I'm talking about pure chip plays. Samsung makes refrigerators and TVs and stuff. I'm not forgetting Samsung. I'm talking about pure chip plays. There are only 2 pure chip plays, NVIDIA or AMD. That's it. Might want to buy AMD calls. Oh my God, bro. Yes, you want to buy AMD calls after it doubled in price in 2 months. Now is the time to buy AMD calls. QQQ green. Not quite. It's still down 0.03%, but David, it's time to log off. I mean, there's 7 minutes until the market closes. Karan. Yes, I'll go over in video once again, the trade, because that is actually a good question. So NVIDIA, the thing that caught my eye in the morning was it did not take out its pre-market low, okay? So it had it had these pre-market lows. It did not take it out, and we were chopping since yesterday PM. And in the morning, we expanded up. So initially, I thought, okay, where are we expanding up to? Right? Initially, we hadn't taken this 4-hour fair value gap yet, so I thought we would expand here and decline. In the morning, when I was on the live stream and I was trying to trade this, we went past that 4-hour fair value gap, which is this shaded area. So logically, what I'm thinking about next is, okay, this is not the liquidity sweep. Clearly, we are going for this external high here, right? So then during the FOMC stream, we went for that external high. And we, depending if you took it from the 3-minute or the 2-minute, either way, that green line, that's the all-time high. We swept that liquidity and created a change in the state of delivery right here, right? We closed below that. So then my thesis was, okay, we swept that liquidity, we closed below. The indices are also retracing due to Jerome Powell. So there is support from the indices and even the mega caps going down, even one that was up 2.5%. And where's my target, right? I can't be a dumbass and be like, oh, I'm targeting these equal lows and I'm going to be a boss. This stock was up 2.5% and it just crossed all-time highs, right? So all I was aiming for was a typical retracement, which is a very conservative retracement would be at the 0.5 of this entire move. And you also have this protruding low right there. So really perfect confluence. That's it. Do you think Netflix is worth shorting? I did, but I also can't chase a play that I missed. So I chased, if you go back and watch my video 2 or 3 videos ago, Netflix was on my list for shorting, but I missed my entry and it finally played out. So I did think it was good for a short. Right now is not optimal. Karan, you're welcome, bro. Daniel Fernandez, I hate soft investors. Well, bro, I've been around the markets for a long time. So I know all of the mistakes that people are prone to making. And moreover, I know how retail thinks. And, it does annoy me because I want everyone to do better. And I think that these mistakes are so easy to fix. It's just a little bit of a lack of understanding, and it's bringing over the bargain shopper's mentality into stock investing, right? Everyone thinks they're going to short the top. Everyone thinks they're going to buy the bottom. Everyone sees a stock like UNH or Intel and says, oh, this was high, now it's low. I'm going to buy it and I'll be a genius. Not how investing works, right? And I think these mistakes are very easy to avoid, right? So people won't buy a stock like AMD if they didn't catch the absolute bottom, right? And I didn't catch the absolute bottom. I'm the first to admit it. If you guys are familiar with this channel, you guys know that I actually used to short AMD quite a bit last year. And I thought that people that were buying it as it was clearly in a downtrend you were shooting yourself in the foot. It wasn't until it technically set up, finally took liquidity below the 2023 lows, broke market structure, retested. From a technical standpoint, I liked it. And then once I started reading more and more about their latest releases, the tests in comparison to NVIDIA Blackwell chips, the rising demand, the fact that it was a clear number 2 in the space, the fact that it was a $200 billion market cap company, which is why I said that it has a much better chance of doubling, because for a $200 billion market cap company, in AI, the second leading chip company, to double to 400 billion is not out of the realm of possibility. If NVIDIA is at 4 trillion, it's very hard to justify NVIDIA going to 8 trillion, right? And I own a lot of NVIDIA. But then after I started swing trading AMD and those news stories came out, right? I'm not ashamed to say when I flip my thesis on a company. As a matter of fact, I think you have to if you want to be a good investor. And I started liking the company more. So my cost basis is like around 115. All that is to say, when people don't catch the bottom, they think that, oh, I'm not going to buy AMD. What else is at the bottom, right? Intel's at the bottom. I'm going to buy Intel and I'm going to get rich, just like those who bought NVIDIA. Not how the market works, man. And you're much better off buying AMD on a retrace than you are buying Intel at the lows. It's just how it goes. Can you explain FVGs? Not on here. How long did it take you to become profitable? I talk about this quite a bit. It took me 3 years to not lose money, right? So it took me 3 years to be a break-even trader, somewhat profitable. It took me another 2 to 3 years to actually get to the point where I'm making a good income. Not as much as my job, but a decent income. And I was still working a 9 to 5 at the time, right? But a very nice side income where now I'm consistently winning. It took me about a total of 10 years to get to a point where trading can replace my job. And obviously this is arbitrary because people have different jobs. Those of you that are starting really young, you might work, I don't know, at a hotel or something. You might easily start making more money trading than, working the front desk at a hotel. But I was working in tech. So it was very hard for me to leave the golden handcuffs. And that's part of the reason why it took me 10 years. But, I would say to get to a break-even trader, 3 years. And it's a lot harder to go from a losing trader to a break-even trader than it is to go from a break-even trader to a profitable trader. That transition, the latter transition, really is in a few minor adjustments to what you're doing on a daily basis and limiting your stupid trades, and basically ensuring that your losses are always small. You're never going to avoid losses. What's your feelings on Comcast? I don't have feelings. Hazy, a lot of platforms allowing fractional shares. Can you? My God, bro. Too long of a question. Try condensing it. What is the success rate of your strategy? It varies. In July, our win rate on swings is 90%. I'm happy with a win rate that's around 50 to 60% consistently because my risk to reward is always 2 to 1 or greater. So win rate is, I don't care about win rate as much as I care about profit factor. All right, guys. Caught a nice banger on stream. Microsoft, Meta earnings tonight. Amazon, Apple tomorrow. For those of you in the Discord, I'll see you tomorrow. At market open, we do it all over again. And yeah, appreciate you guys. Leave a thumbs up on your way out. Peace.